Good evening, good afternoon, good morning, and good night. Today I'm going to be talking to you about accounting for your mining income and just some quick ways to track it to get an overview of your operation. And now, I know when you hear the word accounting, you probably think about taxes and all that boring stuff, but tax accounting is just one very small part of the field. So this would actually be considered managerial accounting, which is used to get an idea of your operation, see what's efficient, see what might be holding you back, and just it's objective. So without further ado, we will hop right into this, and we'll start off with something a little bit boring, and that would be cost volume profit analysis. Now, this isn't that important in the end. It's more of just a very advanced way of looking at basically how much you make, whether you view it as a per mega hash, whether you view it as a per item, whether you view it as a per rig. Like, this is just a very quick calculation that you can do that it basically doesn't matter how you do it, but you'll be able to get an idea of it no matter what. You know, there's infinite ways to break it down. You don't necessarily have to do it, but I at least wanted to show you it and introduce you to the concept. Now, the first thing we have to talk about when you're talking about accounting for your mining operation is how do you view it? Are you more focused on expansion, or are you focused on profit? Are you focused on looking at it on a per GPU basis or on a per rig basis? And basically, there's no right way to do this. It's more about how you want to operate, and it's about setting a goal for yourself and making sure that you stick to it, because whether you choose either of these, it's not going to hurt you. What's going to hurt you is if you don't choose either of them and you just continually operate without really setting your goals, because then if you're operating on a per unit basis, you might do something that's counterintuitive to a per rig basis, and if you do it the other way, it's going to be vice versa. So consider what you're doing and make a decision. That's more important than anything. So, which one's better for you? Let's take a look. Here are some pros and cons of each, and basically per unit it's a little bit safer, and it's going to help you be a little bit more profitable, but it's going to be harder to expand your operation, and you're not going to get an exact number for each unit unless you're working very hard, and it's just not worth it to get as accurate as you'd want to be. As for per rig accounting, it's better for expanding, and it's better for diversifying, because then, you know, you might want to look at different GPUs. You might want to look at setting up multiple rigs. And on a per unit, you might want to simply go for the most efficient GPU possible, while that might not be the best GPU in the long run. Now, the problems with per rig accounting is you're not really going to be mining in the green, which basically, when I say that, I just mean you're not going to be mining with a GPU that's paid off, because ideally, you would use the profits from a GPU to just go and buy another GPU. So you're not actually pocketing these profits. Let's take a look at some per unit accounting metrics and some quick calculations you can do just to get an idea of your operation. So what you need to consider before you go into this is how much ETH are you getting per mega hash? How much mega hash are you getting per GPU? How many watts does it consume? How much did you pay for the GPU? And what are you paying for power? Once you have all that, you can do all these calculations here, which will basically just give you a general idea of how your operation is and how well you're performing. Looking at per rig accounting, most of the things are very much the same, and it's mostly just looking at grouping sets of GPUs together based off how many you have on each rig. And the reason that this one is a little bit more accurate is because you can just include overhead power, like what your motherboard and CPU and a hard drive are. You can just include that in the entire rig instead of having to worry about dividing it out amongst each and every GPU. So it makes it a little easier on you when you do it this way. The calculations are the same, and for the most part, you'll get similar numbers if you just look at your operation as a whole, but most of this is just talking about perspective, setting goals for yourself, and making sure you stick to those goals, and that is what's most important about this. When it comes to managerial accounting, it's a little bit more flexible. You can do more of what feels comfortable, as opposed to what someone else around you might be doing, because it's right for them. So take some of these things into consideration. Leave a like and subscribe if you thought it was helpful. I'm going to try to focus on the accounting side, because that tends to be my raison d'etre so far, just because it's the only thing I'm at least semi-qualified in. So I hope you enjoyed. Have a nice day, and I guess I'll see you on the moon, Mars, or hopefully beyond.